Good morning, Academy 55, premium members, and everybody else who's watching and recording. It's David Kahn here on Thursday, the 26th of June, 2025. It's 5 to 8 in the morning. We're looking at the EUR USD on the 1 minute time frame following the Academy 55 indicators and strategy and seeing if we can get ourselves a trade. But as ever, we are also looking at the bigger picture. 8 in the morning, we're looking at the EUR. Excuse me. We're also live on YouTube. So if anybody plugs into my channel, but on YouTube there is a delay. So please bear that in mind. All the Academy 55 members get to go into the same Zoom room as me. So therefore there shouldn't be a delay. But if you're watching on YouTube live, there will be a delay. But like I said, we're going to be looking at the charts. So the first thing we do is we will take the indicators off for the minute, and we will go on the daily time frame. Now, the euro has been the highest it's been. Just get rid of these yellow ones. These are former zones. Don't want to confuse. And don't want to confuse. This, we'll get rid of this because this is too far away from price. So don't want to confuse people. But as you can see, we are the highest we've been way past the, I'll put that area in for a start because that is a key zone area. Anything with 3 zeros at the end of it. Didn't quite get it. So what you do is you go right click, go into settings, and where it says coordinates, you can write that in 1700. Oh, sorry, 17000. Watch that change just a little bit. There we go. And now that's on the key zone area. That's where a psychological area where people, long-term traders and investors like to take trades in, take trades out, that sort of thing. So that's quite a significant psychological level. But looking at the, put it on the weekly a minute. Wow. Put it on the monthly even. So we now the highest we've been since September 21. 4 years. Nearly 4 years. So yeah. But we got imbalance up here. Price likes imbalance. So is this now opportunity to go up to these areas here? I won't mark that out because that is loads. That's like 300 pips away. There's no point in us marking that up yet because it's not significant to us yet. But if we keep going up, it will be maybe next week or maybe the week after. Who knows? So that's the daily, pushing on up, creating imbalances down here as well, don't forget. And we've got a little bit of them, yeah. So we'll go down to the 4 hourly. Now there's no other significant support and resistance lines that are going to be relevant. So we will go down to the hourly just in case there is. And we will put the line chart on. And this area here and this area here, yeah, we'll mark that up. Because this area here, price stayed there for an hour, and also it rebounded off that as well. So that's a significant area that we will mark up, but that's about it really. So we will put the line chart on. Note the imbalances down here. I think it would be prudent of me to mark that up as an imbalance. That's the nearest imbalance. Or is it? Does that wick correspond with that wick? So that's no longer imbalance. But that's imbalance there. So we'll do that one. Not sure about that one because we got a wick there and a wick there that maybe counteract that imbalance on that candle. So we'll come down to the 5-minute time frame and make a note of the buy zones and sell zones. Oh, look, it's that support and resistance line. That's the key zone. See, it bounced on there on the 5-minute. See how it respects these lines. So if you're in a trade and you come up with these ones, one of these lines, you act accordingly with your stop loss. If you're in a trade, if you're coming to the end of a trade, you might get to this area, and if you're 2% up here, for example, you might think, you know what, rather than let it perhaps bounce, I might as well take the money. You've got to do that on the spur of the moment. And also, it's not to say that it'll come down and then go through, because there's lots of sell orders here. Well, there are sell orders. I don't know about lots, because this is the sell zone. So we'll mark that up. That's what gives us our confirmation of taking a trade. So we'll mark that up there with these yellow lines. Also, horizontal ray down here. Now, we was nearly in the buy zone here. So around about 7:15 today, any buy alerts, you would be looking at those because of that buy zone. So we'll go down to the minute, and there's our zones. Put the indicators back on. So 7:15 today, which was there, price nearly came into a buy zone, and indeed you would take the next buy, and lo and behold, we had one here, keeping 2.2 pips away. That's where the stop loss would be, there where the red ray needs to green, keeping a minimum of 2.2 pips away. But you've got a 5.4 pip stop loss, 2 to 1, which is up there. And as you can see, you would have had a nice successful trade. And that's because price was near the buy zone, very, very near. I mean, we're talking about tenths of pips, not even 1 pip. So you take the next buy, and down we go. Oh, sorry, up we go in this case. So now it's rebounded off that key zone, and we could be looking at a sell. So we put our MT4 on, right in here, 22, 2.2 pips away. Oh, I locked it. So I'll reverse conditions, and make sure you've got your risk to reward in purple, your lot calc in purple, your all important 1%. And now we're ready to take a trade where we know that because we haven't been in the sell zone, we've got a 65% win rate with these sort of trades as opposed to a 75% win rate. But this time of the day, we get more of a move than other times of the day because of this is the times of the day where they're more likely to, on the EUR USD, to start trending a little bit. Not to say they will, but there's more of a probability of it than perhaps other times of the day. So we are in our junked position, and that is waiting for perhaps a sell. We've got its price going to come down to go on the purple line, the 462 EMA that it likes to do. Is it going to come and look at these imbalances it created on these candles here? No selling power that side of the candle, no selling power that side of the candle. That's why that's in balance. We don't know. Or is it going to form new higher highs and take advantage of a really weak dollar? We'll have to wait and see on that. Nice to see so many the Academy 55 members on this morning here live with me here in the Zoom. And you're most welcome if you're watching us on my YouTube channel. Please be aware if you're watching YouTube, there is a significant delay between me pushing the button and you actually seeing it on YouTube. Whereas if you're a member of Academy 55, you get to watch me live, and then there ain't much of a delay between me hitting the button and the actual trade. But we're lying in wait now because the volume ribbon is leveling off. We need that to turn red. We need that to turn red, and we need the wave to turn red. And this is where, just down here, this will be where the stop loss will be. Of course, with a big sell alert, because that's the next one on the rank anyway, because that's how it works. I can show you. Because look at buy, sell, buy, sell, buy. So the next one's got to be a sell. If we get that far. So we wait and see. While we're waiting for that, I will show you this.
Hi, this is Steve with a very short video to show you where to get the training for the indicators and tools we use inside Academy 55. So once you're logged into the members area, you'll see in the premium dashboard this section that's entitled Start Learning. And if you click here, that'll take you through to the learning library. Now, we'll say at this point, we highly recommend you watch each of these videos 2 or 3 times to get a full understanding of how everything works. Here you'll find tutorials on using the MT4 Trade Assistant and how to use the MT4 platform with the Trade Assistant. This is the longest video you'll find inside the platform. It's around 30 minutes long, well worth your time. Watch the video once, then maybe write a few questions down that you might have for yourself, and watch the video for a second time, and things will really start to make sense. By the time you watch it 3 times, you'll fully understand how everything works. So that's the longest video. It's about 30 minutes long, well worth your time. And then you can jump into individual trainings here for how to remove indicators. These videos are just a couple of minutes long. how to move MetaTrader around like you can in TradingView, trading assistant controls, how to do back testing in TradingView, how to draw vertical lines to mark out your hour, and so much more. And by the time you watch this video or see this video, there might be other trainings in this section. But everything here is well worth your time, and you find that, as I said a moment ago, from the main dashboard in the Start Learning section.
Right, we'll cut that bit short because we might have, I don't want to miss it. A little bit of volume. Thanks, Steve. Really great learning stuff we got in the back of the Academy 55. I do urge all the members to go and explore all that. As Steve says, watch it 2 or 3 times. First time, you get an overall view. Then you may have a few questions in your mind. Watch it again, and then usually your questions are answered. The second time you watch it, because you're looking out for those. So do go and refresh your memory, even if you haven't seen it for a few months, because we got Academy 55 members here who have been with us for 6 months or more, which is really great to see. But go and refresh yourself. But now I cut it short because if we had a bit of a volume, all of a sudden within like a very short space of time, we could have been in a sell situation, because you could be lining up for that. But who knows? Well, we know because we'll have a sell alert. Volume ribbons start to go red. The wave will start to go red. The trend line will start to go red, and then his price coming down to here and beyond. We certainly hope so. But price is going to do what it's going to do. Price needs to equalize itself by going into these imbalance areas. But the timing of these things, no one knows. I mean, they could leave that all day and then go higher, and then all of a sudden a news item comes, big spike comes down and retraces that imbalance all of a sudden within like the space of 5-10 minutes. So what looked like something may have happened, all of a sudden we've gone into sideways consolidation, which happens about 80% of the time anyway. So there shouldn't be a big surprise in that. All the new people that are here watching, I suppose the one thing you'll take away from this is you've got to be patient. Patience pays. And just because you want something, and yeah, try not to try and distinguish yourself from the fact that you want a trade to happen. You got to trade what you see, not what you think. Just because you want a trade to happen doesn't mean to say it's going to happen. I mean, now we're continuing the buy. So price has got to come down here based anyway to push that parallel SAR up. And these usually last about 3 or 4 at least minutes going up. No, we're going higher again. Which is a shame, but it is what it is. And we haven't lost any money. That fundamentally is the most important thing. Not whether you get a trade or not. The fact is you haven't lost any money. And hopefully gaining a bit of experience. So I wonder if we can finish.
Hi, this is Steve with a very
Sorry, Steve, I'll play you on a bit. Bear with
A
me.
moment ago from the main dashboard in the Start Learning section. Now, one more thing just to mention here. If you're looking for anything in particular, if you come down to the support name of FAQs, click on Get Support, and in this area you'll find a detailed FAQ section, and you can come through here. For example, if you're looking for an answer to a question about MetaTrader, have a look through these, and once you click through you'll find direct links to videos that give you answers to most of the questions that we get asked on a regular basis. So hopefully you found this useful, and back to your further training.
Thank you, Steve. Thought we'd play the last bit of that. Right, we've gone above, broken through the key zone area, the psychological barrier, and now we are heading on up. So if we go to the bigger picture, 15-minute on the 15-minute time frame, as you can see, we're heading towards the sell zone. Now there could be some sell orders here, and this is the highest point since 2021, 4 years ago. Is he going to break that today? Who knows? So this is where we are. So really, according to our strategy, you wouldn't be getting in here. And no way would I really, because I know the sell zone's got to be there. You would have got in there with the buy alert, and then you wouldn't be getting in here or here. You'd be getting in here. As soon as the buy alert and everything goes green, no delay. So EUR USD is meandering its way up. Now, just like down here, if you remember, it wasn't quite in the buy zone. Now we are quite nearly in the sell zone. So here, if they're, I mean, if they change their mind and they don't want to go any higher, for whatever reason, to maybe get down here again and equalize and all that sort of stuff. The next sell alert is ours anyway. If it happens before 9 o'clock. So with that in mind, I'm going to play the trade assistant setup, Steve again.
Hi, this is Steve, and in this short video I'm going to just show you the settings for the Trade Assistant to make sure that you've got the minimum 2-pip stop loss on the Euro USD or any currency pair, and how you set it for if you're trading a commodity like the US 100, because the settings are slightly different. So here you can see we're on the Euro USD chart here. I've got my risk to reward on the Trade Assistant locked at 2 to 1. I've got my risk balance at 1%. Lot calculator is on, and my little purple button here between the buy and sell is also activated. So we're ready to bring the Trade Assistant onto the chart. Now you'll notice here that we've got the stop loss set at 20. That indicates 2 pips when you're on a currency pair. And we can actually change that here by typing over it. So if I type in there 40 and just tab off here, you can see now we've got a stop loss of 4 pips because we're on a currency pair. In this example it's Euro USD, but it could be Euro GBP or any currency pair. So let's just put that back to 20 for our 2 pips. We'll click off here, and now we'll just put the lines on so that you can see that is showing us 2 pips over here on the actual tool, ready to actually get involved with a trade if that's what we were going to do. But that's not what we're here for now. I'm going to click off the lines here, and what we're going to do is we're going to change our chart from Euro USD to US 100, and I can do that by dragging it onto the screen here. You'll see it now switch over to US 100, and now you can see that stop loss says 20, and that's wrong for a commodity. So what we want to do here is come in here and type 2000. This is the equivalent of 2 pips on a commodity such as US 100. So now when I put the lines on, you'll see we've got the number 2000 here, and if I just zoom around, you'll notice the 2 to 1 still applies, 2000 and 4000 here, where we've got a $1,000 trade in place, risking $1,000 to win $2,000. So that's the number that you need to get your 2 pip minimum on. So the minimum number would be 2000. You could have anything above that if you're on a commodity like US 100, and the number will be 20, which is 2 pips equivalent if you're on a currency pair such as Euro USD. Hopefully you found this useful, and thanks very much for watching.
Thank you again, Steve. Right, so look at that. We've touched the sell zone now, but it doesn't change anything because we know we're going to take the next sell. And this is the scenario for the next sell. If it happens, it'll be keeping a minimum of 2.2 pips away. Minimum, it might not be that. It might be more than that, which will be there. But as you can see, we have a big climb, taking maximum advantage of the weakened dollar. But if it turns around, this is where the stop loss will be here, anticipating the green wave turning to red, and our 2 pips or 2% is there. But as you can see, because of the size of these candles, we are on a strong climb upward, and unfortunately we have to wait because there's nothing we can do about that. Just got to wait for it to hopefully turn around. But is price getting up to these levels here, equalizing with that area there, and maybe beyond? Maybe. I've just anybody got any questions, they can write it in chat. EUR USD hits $1.17 as Trump touts Powell replacement. All right. Now in football terms, he's the manager, Powell, and Trump wants to get rid of him. So he's got another guy. So that's doing something to the dollar. Obviously, the dollar's not sure about it because they don't know who it's going to be, maybe. So that could be one reason why the dollar is getting weaker. Is this new person going to be better, Powell, than this Chairman Powell, or worse? Or what? This new guy's, what's his opinions on the way forward? Don't really know yet. So the dollar's reacting against that, doesn't like it. So the dollar's getting weaker. Hence the euro's taking advantage and getting stronger. That may be what's going on. But in the meantime, we've been in the sell zone now. So we got our confirmation. So if we do have a sell trade, we know we got a 75% win rate now. Now all these other things you see on YouTube, and they got 95% win rate and stuff like that. They've probably given themselves a really big stop loss. And at the end of the day, they're probably going for a 1-to-1 or 1-to-5. We're going for a 2-to-1. So we really ramp up our profit margins. And this Academy 55 indicators and strategy on the 1 minute time frame has got us through the prop firm trials challenges that you need to do. Right. Okay. So we've got our sell alert. Of course, we've got to wait for everything to go red. I'll keep it there just in case. Yeah. So using the Academy 55 indicators and strategy, i.e., only 1 or 2 trades a day, red, red, red for a sell, green, green, green for a buy. All the good stuff that you can see in your back office. We know that several people have passed prop firm challenges, but you've got to keep your mindset, try and stabilize it active just the way it was when you first started, not try and what you think would improve on it. Why don't we do 3 or 4 trades a day? There's a reason why we only take 1 or 2 trades a day, and that's so you don't either consciously or subconsciously put more pressure on yourself. Because when you get in and take more trades, you're in a world of doubt and hurt. Then you're more nearer to that world. So if you take 1 or 2 trades, you go back and reset, and you can reset your mind and come back to it just as strong as you were at the beginning of the day. Maybe that makes sense. Here in Academy 55 in the back office, we got some motivational stuff for you to view and, to spur you on a bit. Because trading is a lonely business. And if you can see other people having success, doing the same things as you are, if you're not having success, step back and have a look why that may be. Analyze what you've done. And that's why we encourage people to keep their journals, so you can keep a journal of your way forward. Now, just download my journal and delete all the information, and then you can keep it for yourself and start your own journal. But this is where I want the stop loss if we carry on this sell. This is where the stop loss will be, assuming that's going to turn red. We're waiting for that to turn red, which it will do if price ends up down here. And we're waiting for the trend line to turn red. But where we are now, we are coming down to that key zone area again. I'm minded by the fact we got red alert news at 9 o'clock. Austrian, it might move a few pips. So we'll bear that in mind if and when that happens. And also, if it's fairly big news, which I can't really see why it would be, but price will go sideways like this until the news is passed, and then assimilate the news and go up or down accordingly, whether the news is good or bad. But it's Austrian news, which is only one little part of the euro. But if it's big news, well, not big news, but if it's important news, it may well be enough to move 5 or 6 pips. And usually most trades we're only after like between 10 and 12 pips, maybe sometimes even less. So if the news will move 5 or 6 pips in one way or the other, it could be enough to take your stop loss or even hit your take profit. So you act accordingly at that time. Right, we've got a red volume ribbon now. This is where I want my stop loss, but I've got to wait for the anticipation of this the green trend line. See how it's leveling off? It's going at 3 o'clock. You can imagine a clock face. So that could go red at any time, but I wanted to go a little bit lower. I'm going to give it a few more pips if it does, down to this area down here, because it's just tapped into this imbalance. I wanted it to go a little bit further, but maybe give myself a 4 or 5 pip stop loss, who knows? I'm at 2.2 pips now. I'm anticipating that green trend line. I'm ready to hit the button anytime, really. Just want a little bit more, maybe get to 4 pips between stop loss and entry. Right, I'm going to get in. I'm at 3.4 pips between stop loss and entry. And this is where we are. So I'm going to go to trading view now. And 3.4, wasn't it? Which is there. Two to one down there. Going on the 5 minute, we can see there's a little bit of imbalance there. I think there is. Hopefully, our 2% is in the way. So hopefully, if they're coming down to get imbalances, there's imbalance down here as well on that candle there. But you know, the timing, they might not want to do that right away. We get too carried away. It is what it is. We know, but we know we've got a 75% chance now of this trade working. I'm going to leave that there like that. You can see that sell alert. There we go. Now, is price wanting to come down to revisit the purple line down there? Certainly hope so, because obviously our 2% profit margin's in the way. But it is what it is. It's very nervy time, as you can appreciate, with what's happening globally. And indeed, the trend line has turned red. I think I anticipated it just as I was getting in. I think it was still just about green, but it was, if you can imagine a clock face, it was facing 3 o'clock. So it's ready to hopefully go like that for us. But if we do face a 1% loss, we face a 1% loss. No big deal. Really isn't. Me, I've got to go down to Falmouth today, so I won't be spending any more time on the computer once I've left you. But I'm in the advantageous position where I have got my target for the month. Obviously, I take all trades seriously, the same as I would do anyway. I don't deviate from the path. I don't take a trade, oh, for example, oh, I've got my target now. Let's just try this. No, no, I always carry on the same path. Keep my mindset the same as I always would. And I suggest you do as well. You don't deviate your way of thinking. If you think you know what works for you, and you'll find out what works for you by having a journal, create a journal, steal my journal that's in the back office, make a copy of it, delete all the information and make your own journal and find out what works for you, what time of the day works best for you. Give it a good couple of months. Got to give it a real good old back test at that particular time when you're going to be trading. Be realistic about it as well. And if it works for you, then don't change your mindset and do something else. Stick with it. That's where people go wrong. They think they can improve on it, and then they try something different. And all of a sudden, they're doing a complete different to what they were, and then they wonder why it went wrong. Whereas if you journal it and be realistic about your back testing uh, and be subjective about it, you will it won't lie to you. Let's put it that way. Whereas you could lie to yourself if you don't do these things. Because you have to remember how you took each trade and all that, which is not I don't know anybody who's got a good enough brain to remember exactly what they're doing on each trade. But you can do that in a journal. Write down in the comment section how you felt about the trade, whether you took it live, whether you back tested it. But as we can see here now, we are essentially only like a couple of pips out from hitting our target. But you know, if the Parabot comes down to the entry line, then I would consider putting my stop loss to my entry and having a risk-free trade to the rest of it. We have got a little bit of imbalance here, which is maybe a bit of a worry, and imbalance up here indeed, and here. But we've also got imbalances here. So, but we know we've got a 75% chance of the trade getting our 2%. And by only having one or two trades a day, a low percentage target, monthly percentage target, the long-term view is good. So at 9 o'clock, if this trade was going on till 9 o'clock, I would be considering putting my stop loss to my entry anyway, or maybe even taking out because of that little bit of news. Because if it's good news, it could essentially go right through there. Even though it's only Austria. Right, if we can go a little bit lower, please. Only like another couple of pips. We obviously got our 2%. In another minute, I'll be considering putting my stop loss to my entry because that parabolic SAR is just above the entry. Got to give a little trade a little bit of wriggle room, but it's got that wriggle room now. Oh, look, listen to me. Oh, well. See this line here, price rejected this line here and here as well. So this obviously is an important barrier at the moment within this time frame. I'm going to stick it out because I have seen price go up to here and then come back down again. But if we're facing a 1% loss, it really is not a big deal. It might affect you mentally. That's why I always say don't watch the trades. There's no point in watching trades like we are now, although I am duty bound to do that because we are on a training session. But usually I would go down, make it a cup of tea or something like that. There's no point in watching trades like this because all it does is mess with your mind. You've made your decision. You know you had a 75% chance of the trade working. And if you face a 1% loss, so be it. Now things are leveling out a little bit now. Are they going to be going sideways a bit? We was 2 pips away from our 2%, but we still might get there. See what I mean by when I say give the trade wriggle room? Because if I'd been too cautious now and put my stop loss to my entry, I'd be a break even already. But now I still got a chance of getting the trade. I mean, because the trade could effectively come down and again get into these imbalances down here. We just don't know. But if we got a 1% loss, we got a 1% loss. Own it. It's a 1% loss, no big deal. And you could possibly come back later on today. Oh, look. That's a real shame. Yeah. We was 2 pips away from now you've got this buy happening now. You wouldn't be wanting to take a buy because you know a sell zone's up there. Two pips away from getting my 2%, but it wasn't to be. Faced a 1% loss. We've got news at 9 o'clock this morning. It's rather a shame. Go into my trading view. There we go. So that's where we were. This is a pity. So put that on there. Put that in my journal later on. This is where we were. It was only like 92, 2 pips away. But that's trading. And now we got a 1% loss, which is not a big deal. Really not. So guys, I'm going to leave you with that. I shall be back again tomorrow morning. And we'll do it all over again. Have yourselves a great day, everybody. And speak to you soon. Bye for now.